Well, welcome everybody. Welcome to the Crexy Pro Perspective. I'm very happy to have my good friend Steve Silverman join us today from the Friedman Real Estate Group based in Michigan. And we're going to talk about a little bit about the retail space today, and we're going to talk about the auction space today. My whole career has been in retail primarily, so it's really my strong suit. And I've been in the auction space for about 10 years. And I think Steve's been kind of lurking around in there for about the same amount of time. And we both had some great success there. And so we'll get to that. So anyway, I want to introduce Steve. Steve, maybe you could just kind of give everybody a little bit of your background before we get started, and then we can go from there.
Yeah, absolutely.
Today. So
I'm happy to be here, Bob. I appreciate you guys inviting me on. As you indicated, better part of, call it 5-7 years, been really focusing on the investment sale world of retail real estate. Probably 85% of the business is really focused on auction sales now. We're really broadened across all asset classes, so it's not just retail, but big bulk of that is where we're at. And so, happy to be on today, answer any questions that you or the audience have, and kind of go from there.
That's great. And you focus primarily Midwest, right? Chicago, sort of that corridor from.
Yeah. I mean, we've actually transacted in 37 states. I'd like to say that we focus primarily on the Midwest, but, we're closing on an auction deal right now in Vegas. So it kind of takes us all over the place. I try to be, geographic agnostic when it comes to selling. But for the most part, yeah, we're calling primarily on the Midwest.
And you guys have become a pretty dominant firm there in that part of the world over the last, let's say, 10 years, right?
Yep.
And they really do a lot of work in those markets. So why don't we talk a little bit about sort of what you think, or what do you see in the retail space, just as general, as a general, kind of question in light of where we are with COVID and, the stimulus and, or the tenant, how are all the tenants doing? And I know, for me, we know the mall space is challenged, right?
Sure.
And this has been challenged for quite a while. And so, I think this is kind of going to be the thing that sort of pushes the mall space over the edge. But, neighborhood retail, grocery anchored, drug anchored, daily use type stuff seems to be doing okay to me. I mean, other than maybe the restaurant space is obviously challenged a bit, and gyms and things like that. But yeah, what are you seeing out there?
Yeah, I mean, I'll echo the same thing. I mean, I think the narrative has been really, since this started, anything grocery anchored and the, adjacent tenants to them seem to be doing fine. The PPP loans and everything else to that regard has obviously been a huge help, as has the unemployment benefits and stuff like that. Restaurants, no question, are having a difficult time. In cities like Chicago, where they're now back to being closed with no indoor dining, I think the winter is going to be a really difficult time throughout the Midwest, in markets where, indoor dining is not really an option unless someone wants to, take the risk and go out accordingly. But, mom and pop retail, I think there's a lot of concerns there going into a long winter and early next year. People I talk to, in many ways, surprisingly, I think that in some ways people have been able to weather the storm maybe a little bit better than was anticipated. I think in the beginning, everyone was talking about, retail bankruptcies, and we thought it was going to be this huge flood of what was going to happen. And not to say that that is not on the horizon. I think, talking to lenders and stuff like that, there's a lot to be had for, call it, early part of next year, when we start seeing more retail bankruptcies, more property bankruptcy type of assets coming back.
Uh-oh. We lost Steve, I think. That's what it is, live television. Okay, so I'm gonna have to start, singing and dancing here, I guess. Let's wait a minute and see if he can come back on. Apologize for that.
I'm back.
Okay.
I apologize for that.
No problem. Hey, it's live TV, right? I was singing a song while you were gone.
Yeah, exactly. No, but to that point, I mean, I think that, you know, the narrative we're seeing all across the country is the same in terms of what's happening in retail. I think, you know, people are cautiously optimistic there. It'll be very interesting to see what happens in terms of stimulus, you know, January of next year. I don't think we're going to see something between now and the end of the year, but hopefully they figure stuff out. And, you know, we're seeing buyers. We're seeing buyer activity really across the board. We have throughout, which is huge. Sellers, we'd like to see a little bit more motivated. But
there's a gap there, right? Bid ask price, there's a gap.
No question. But lenders are out there lending and buyers are out there looking for deals. So for as long as that'll continue, you know, people like ourselves will continue to sell real estate accordingly.
Yeah, so you do see lenders are, you know, underwriting deals and doing loans on retail, yes?
Yeah, I mean, I thought that they were going to stop. Like, I thought this was going to look like 2008 and like they were going to be like, no. But even in tertiary markets, I mean, there's a lot of good financing options with the USDA right now where they're offering like 80-20 LTV at very competitive interest rates, really try to spur investments in secondary and in tertiary markets. We've seen them in many ways picking up on investment activity rather than slowing down. So, you know, again, as long as that continues, I think that if we're able to, you know, close in the gap as you're referring to in terms of the bid ask, there's going to be a lot more transaction volume. But, you know, to that point, and my colleague and I, we were looking at it this morning, a lot of what we call on is product that's been on the market for a long time, and usually try to take that type of product to auction. There's a shortage of new listings that came out in the past 6 months. So if you look at the market landscape, there's a lot of single tenant product that's out there, but the multi-tenant retail that we, you know, usually see on an annual basis, that volume is down considerably. And I think a lot of that has to do with sellers being, you know, talking to their brokers and saying maybe now is not the right time and kind of kicking the can down the road.
You know, that's an interesting concept because I talked to in my former life, I worked at Red Mountain Retail Group for 14 years, right? I talked to my friend Mike there, and he says that they're signing leases, that they're collecting 85% of their rents pretty much across the board. He's primarily in the, you know, Western US, Phoenix and Texas and California. And
sure.
You know, and he's helping out some of the tenants, you know, some of the restaurants and some of the, like some gyms and things like that, just because, you know, he's a good guy, but he seems to think it's okay. Right. And he's got a lot of new activity from national tenants that are looking for new spaces. And I talked to him about a week ago and he had like 15 leases that he was getting ready to sign, which seems amazing to me.
Yeah, no, you know, to that point, I haven't called someone or been called by someone throughout the the pandemic period, let's call it, where someone was like, hey, I really need you to help me get out of this asset right now because we're losing tenants left and right. It really hasn't been there. In many cases, you know, there's been forbearance and there's been workouts with tenants where, you know, they'll give 2 or 3 months of free rent for, say, a long-term extension on the back end. But it hasn't been like the floodgates have been opened and everyone's freaking out and they have to sell their real estate.
Yeah. Well, I think, yeah, you know, it's funny. You work in a bunch of different markets and you also, you know, you work on different product type too. So I think, you know, because of the auction format, you know, we have this includes me, you know, I see a lot of different product types and I have some vision into a lot of different markets. Right. And, you know, some of the market, so I hear a little bit of everything, right? I hear some of it's horrible, some of it's good. But it appears to me that there's a lot of capital out there still chasing, you know, assets where they can maybe make a better deal.
Yep.
We also, both of us talk to the servicers and the banks and, you know, institutional sellers quite a bit. And I'm hearing pretty much the same thing from all of them. You know, some spaces are worse than others. Obviously the hospitality space is getting, you know, hit pretty hard. I heard a statistic yesterday that 28% of all of the CMBS debt on hotels is in default and going into special servicing, which is that's a huge amount of product. And, but I'm not hearing that in retail and not even office at this point. And so, you know, maybe the reluctance of people to list and sell is just because, you know, waiting for the election to get over, which is almost done, I think, you know, 100% sure yet, but at least we're getting a little clarity. So, you know, and what I'm hearing again from the banks and servicers is that there is a lot of default coming. There is a lot of distress coming. And first quarter, second quarter, third quarter next year, we're probably going to see a significant uptick in volume. That's what I'm hearing. I don't know.
I'm hearing the same exact thing. And I think, always, physical real estate, privately owned real estate is a laggard to what happens, in the rest of the world. So, 6 months, 9 months, 12 months later is usually when we start to see stuff. So to your point, Q1, Q2, Q3 next year, I think hospitality, retail for sure on the mall side, and, junior mid-box type of retail, that's had large vacancies. That stuff's all coming back. That's going to be on the auction block on behalf of lenders. And, again, if the buyer liquidity is out there like it is today, and I don't know why it would not be there, I think it's going to fortunately be a competitive environment for the lenders to sell assets. Buyers are going to have to sharpen their pencils and try to figure out, how can they be competitive against someone else. But, there should be deals, there will be deals. But I still think there's going to be a competitive environment between buyers come next year.
Yeah, it doesn't seem to, we're not seeing any shortage of
Yep.
Buyers showing up on auction day, and just on a daily basis, on our website, we have significant traffic, as and it's actually increased, during all of this. So
yeah, to that point, and I really encourage sellers, again, I try not to broker a deal. I try to really be an advisor to a deal. This is an opportune time, and it has been an opportune time throughout the COVID period to bring your property to auction or, listing it traditionally, because you're really not competing against an influx of product, right? You have a real opportunity to have your property stand out. You need to be motivated enough to make a deal happen, but it's not the time to be sitting on the sidelines waiting and hoping things are going to quote unquote be better. If you're within striking distance of where a property should trade, I think this is the time to be talking to your, advisors or brokers about bringing deals to the platform.
yeah, I 100% agree. I had a meeting last week. I was actually in Las Vegas, for a couple of days with one of the big servicers, and they basically are putting a bunch of hotels on the market right now because they think that there's going to be so much product on the
Yep.
market after the first of the year that it's going to get diluted. And so
For
they
sure.
want to try to get ahead of that and, sell these for the highest price that they can at the time. And, which is, I think, interesting. So, because that's a great point. You want your product to stand out. You don't want 1,000 other properties just like the one you're trying to sell,
Right.
on the market at the same time, right? Because it'll drive the pricing down, right?
100%.
So that's an interesting thing. It's kind of tough sometimes though to convince the sellers that that's a good idea right now, right? I mean, and you
Right.
deal with that.
But I think
on
the
a daily
stats, fortunately, the stats are there to show what the activity has been like, the past 8 months from buyer activity. It'd be a different conversation to try to convince a seller to take a property to auction or to list it traditionally when there hasn't been, liquidity in the market, when there hasn't been transaction volume to kind of prove out. Fortunately, that's there. It's easy to point to metrics to say, hey, here's the amount of bidders that we're having on auction properties. Here's the amount of, transactions that are actually trading at or above reserve. And I think the proof is in the pudding. The metrics can kind of sell itself, if that makes sense.
Yeah. I know you spend a little bit of time, that's a little kind of off topic, in the office space, and some of those office tertiary markets. I mean, what are you seeing there? I know the office space is going to look a little different going forward.
Yeah.
Particularly in smaller markets.
If there's an asset class that I'm and I wouldn't say very bearish on, but definitely cautious on, it's definitely office. Fortunately, we've been trading stuff. It's not fair to say, really call it off the charts, because office in terms of product being traded right now, it's probably like in shorter volume. Maybe we've done 5 or 7 deals throughout COVID, but there's buyers for it. But the same questions continue to come up, especially on higher vacancy product where you have an out-of-state buyer asking, well, what do we do with this going forward? It's not the old conversation of, well, you can advertise lower rental rates and try to move people around from one property to another. People have to get creative, right? And it's tough to tell the story and to get people excited about office right now when there's that much uncertainty. We don't know what next year's going to look like in terms of people returning to the office. I know myself, and I know you, I don't know if you ever stopped going to the office. I came back after, the 4th of July, and productivity, when I compare it to being at home versus at the office, is not comparable by any means. Not everyone is as fortunate to, with children and stuff, to be able to go back to the office. But I think there's a happy medium, right? I don't think it's going to be as stark as we're seeing right now, where everyone is really working from home. There's going to be a hybrid model, right? It's very easy when companies are keeping people at home, not allowing them to come back to the office. That's going to change next year for sure. But again, I mean, there's uncertainty there, and suburban office versus urban office is another big, question. You saw all the REITs rallying yesterday that have urban office on hopes of a vaccine and the numbers that came out. But, does that mean that everyone's going to rush back to the office because there's a vaccine? It's going to take time. So cautiously optimistic there.
Yeah, we were out of the office for a few months. So we've been back in kind of off and on since, I don't know, July kind of time frame. But, there's only like 5 of us or 6 of us in this office
Yep.
that I'm in Orange County right now.
Yep.
And we've got, 4,500 square feet. And so there's lots of room. So everybody kind of feels comfortable. But,
For sure.
at one point we were thinking, there could be 20 or 30 people in here, which would be a completely different dynamic in this environment, right? So, and a lot of people aren't comfortable doing that, which is understandable. But so, yeah, I'm really curious to see where the office space ends up going, because no one seems to know. That's the one product type that everybody's like, no one knows what that's going to look like.
Well, I guess into that point too, when you look at like urban apartments, right? And, there were record numbers of availability or vacancy in New York and in San Francisco, et cetera. I think that works itself out. Sure. Millennials are buying homes right now kind of at a faster track than maybe they were expecting that to happen. But, I always tell people, if you look at my cohort, I'm 30 years old, 1990, 89, 90, 91 was really the largest cohort after World War II of young children. And so when I lived in Chicago after college, every new apartment building was being built, right? But there's obviously going to be extra supply if you're continuously moving into newer buildings. What happens to the buildings before that? I think urban apartments are going to have an issue. I think we're seeing it now. I think that's going to continue into the future. So urban office, urban multifamily, concerns. But again, I always seem to be surprised. People always seem to have better ideas in terms of what they're going to backfill that with. And I always think that the American entrepreneurial spirit, is more creative than we give it credit for.
Oh yeah, 100%. And in crisis, there's opportunities, right? And I think there's going to be a lot of opportunities for your business and our business going forward, just, with the auction format. I think we're going to see a lot more product coming that people need to get out of or want to get out of. And so I think, and there's going to be opportunities for buyers to buy at values that probably haven't seen in the last 10 years, right?
100%.
Right. And so I think there's a lot of people that have been sitting waiting for something like this. And so I think we're going to see more buyers, more sellers, and more product on the market. I just don't know when that, I don't have the crystal ball there to kind of go, it's going to be first quarter, second quarter.
Right. But it's coming. We know it's coming.
Yeah. And it's good that we're ready. Right.
That's right.
And,
that's absolutely right.
Yeah. Between the two of us, you as a broker, I don't think there's very few other brokers or brokerage companies in the country that are as good in the space as you are in that auction space, you and your team. Because I don't know how many assets you've sold in the auction format, but I'm saying 60, 70, maybe more.
Yeah, maybe 100 plus now. Yeah, I don't even keep track. It's funny. It's such a volume type of business for us. And that's the beauty of it, right? I think the ability to get in and get out of a deal quickly, it's not with that it's limited work. It's a lot of work under those type of timelines. But, once you get used to it and you're really an expert in that space, I couldn't imagine selling real estate really any other way. I always tell people I wouldn't have the level of success that I've had, in a relatively young age in this business if it weren't for auction platforms for that ability to do a large amount of transactions on an annual basis.
Yeah. And I think, you're more and more people are buying into that notion or that concept, right? The internet and technology is obviously not going anywhere, and it makes it so much simpler. Plus, if you're a buyer, everybody's looking for yield, right? And so, what we're seeing is most of the buyers are coming from some other state or some other place than where these assets are located. Yep. Whereas if you backed up 10 years, those people would probably never see those assets, right?
100%.
And would not have the opportunity to do that. And so we got a lot of buyers from California that can't make sense of anything here, that are going to places like Texas and Tennessee and Michigan and, markets like, Livonia, Michigan, right? It's actually a pretty robust market.
Yep.
But who would have thought of that, 10 years ago? It's like, nobody even knows where it is.
I can't tell you, I probably could tell you the last time, but it's maybe 1 out of 10 that we sell a deal in a specific market that it's to someone that's local to that market. It's very rare, unless there's a real use for it, and it's in a larger market that happens. But to your point, in secondary markets, we're selling most of our deals right now to buyers out of New York, Texas, the West Coast, some Carolina buyers. They're not local buyers, but they're willing to take on that higher yield and somewhat of a higher risk that, it's your point, are unable to find when they're looking at compressed cap rates in in their neighborhoods.
So do you also see, one of the things that I've seen over the last few years is that, traditionally commercial real estate operators, owners kind of stay in their lane, right? They're retail, they're office, they multifamily, whatever. We're seeing some crossover there where multifamily buyers are buying some retail, or retail buyers are buying multifamily, or some different asset types. And I think that's primarily because, like, I was a broker at Marcus & Millichap for 5.5 years, right? Focused only on retail. So everybody in my database was a retail buyer.
Sure.
I didn't know anything about multifamily. And so they never saw anything that I had. The multifamily guys, unless somebody stumbled across it, right? And so now I think a lot of these people are seeing, just the ability to see different asset classes is causing some crossover. I don't know if you're seeing any of that.
Yeah, no, 100%. I think a large part of that probably is the internet, right? Forget about Crexy's auction platform for a second. If you just look at Crexy's, call it listing database, the ability to, filter for properties nationwide and download OMs and flyers accordingly. It wasn't possible before, right? You had buyers that were relying on LoopNet with information that was coming from CoStar that was probably outdated information. Crexy, being what I like to call like the 21st century version of what CoStar should be, and open to the public and really being able to access that information. That's what's opening it up. And I think we're finding a lot of that crossover buyers, even when it comes to auction. Someone may have saw a deal being marketed traditionally, and because of a link that was on their banner ad, they saw an auction being advertised that was multifamily. They were retail buyers. They're clicking on that stuff. And I think that's going to continue, right? If you look at commercial real estate as a whole, this industry has always been the slowest to adopt new technology. It's going to have to keep up, or it's going to have to adopt and continue to innovate. And that's happening. But it's definitely happening far slower than other industries.
Yeah, I think, and perhaps this COVID thing with everybody being at home and people spending way more time on the internet and, doing remote stuff like this, perhaps that accelerates that a little bit. I don't know. We're having, our best months we've had, right? Signing up new pro accounts and bringing more product to the market and stuff. And so, we're seeing this as, it's been pretty good. It hasn't been, everybody in the beginning, as you know, was like, oh my God,
it's the end of the world. Right. Right.
It hasn't been that at all. Right.
Yeah.
So, I think between our leasing platform and just the listing platform, there's 400,000 properties plus or minus on the website right now. So, there's a significant amount of traffic moving, across our website every day.
For sure.
So a couple other questions. We've got 78 or 80 people there. We need some questions from the audience here. I'd assume we'd have questions flowing in because I can only sing and dance for so long. But good. Well, okay, I got a question. I like it. Thank you, Betsy. Why the trend of out of state buyers? That's a great question, right? Why are you seeing buyers say come to the Midwest and maybe based in California or New York or Florida? Why do you think that is? I think
as we touched on, but basically to, kind of reiterate on that is if let's say I'm in California, right? And I'm looking at a grocery anchored shopping center, right? Even if it's a Save-A-Lot, let's say it's a secondary type of grocer, Save-A-Lot grocery anchored center, those are trading at like 4 and 5 cap type of rates, right? Cap rate levels in California. You come to the Midwest, you're 8, 9, right? So that the delta in yield is so much greater in the Midwest and other parts of the country versus the coast versus, call it, Texas, That's what we're finding. People are, and they're being priced out. There's still buyers for the 4 and 5 cap type of deals, but there's a lot of product that is as competitive, but trades at higher cap rates just based on geographical location. I think buyers are being smart now in identifying that and going into those markets and hiring local leasing agents to help them and local management firms to help them. And so it's not like it used to be where you have to open up the yellow pages and kind of figure out, who to call. It's you online now, you make a few phone calls and you can hire people.
Yeah. So it looks like Betsy's in your part of the world there, Bloomington, Indiana. So
many friends who went to IU. I love Bloomington. Great place.
I see you guys may ought to connect, Betsy. Question about loans, lenders. You've seen lenders pulling back from retail and shut down for the rest of the year, especially in California. We touched on that a little bit. And then there's another question. What's your preferred auction platform? It's got to be Trexie. Come on now. But anyway, yeah, the lenders. Maybe we could talk a little bit more about that.
Yeah.
I think you said no. You said you're still seeing loans getting done and underwriting, and
Yeah.
I hear a little bit of everything. I hear no CMBS quote.
Yeah, I've been hearing a lot about deals stalling through due to lending. I think in the CMBS world, that has probably gotten a lot tighter and has gotten a lot tighter. I mean, that's evident. That's definitely happening. Credit unions are being competitive right now. Speaking back to what USDA is loaning on right now, I encourage people to look at those options. They're able to get deals done in 60 days, generally at 80-20 LTV, which is unheard of right now. A little bit higher of interest rates, but the government's incentivized to make loans in secondary and tertiary markets. And so they're doing so, for that reason. Single tenant retail, the Dollar Generals of the world, the QSRs of the world, those are getting financed. Everyone's looking at that as kind of the safety net for retail right now. But again, it wouldn't surprise me if someone's trying to finance, a 60% occupied center with CMBS. That's going to be a tough deal to get across the finish line.
Yeah, I'm hearing you can't even get a quote on that kind of stuff today from CMBS stuff. So
Right.
You're going to have to go to some local or regional bank probably, right?
But a lot of those banks are incentivized to lend. They have money on the balance sheets and they want to lend it. So I think you have to be, as a borrower, you have to be entrepreneurial. You have to reach out to the credit unions and the local banks. And you'll find a lot of ways they're looking to build relationships, the local lenders, and they're eager to work with you.
Yeah. So yeah, the questions are rolling in now. I like it. So we had Vincent ask about raw land. Land is difficult in the auction format because, these are 30-day all cash, non-contingent sales, and land unless it's priced right? Because land, you have to get it entitled and you don't know what you can build and how long do you have to carry that. And so land, it's really all about the price. If it's priced right, we see a lot of land go absolute where the starting bid's $1 and, they want $200,000 for it and they end up getting 300 because it's, we get a lot of people that show up on an absolute auction because they, there's a perception that they're going to get a deal. But yeah, land is a little difficult in this format unless it's priced really, really well.
And well located, I would say. There has to be a story to the land.
Yeah, question about 1031 exchanges. I think they did extend the timeframes to identify for a while during the COVID thing. I think that's over with now.
Yeah, it expired. And I know, there was a lot of talk out there in terms of, Biden trying to get away with the 1031 exchange. I mean, I think we'll have to see how that plays out. I would be surprised if that were successful, if the Senate stays Republican. No one knows what that's going to, what that looks like. But I would be surprised. I mean, the people I've spoken to, again, this is in many ways hearsay and just talk, but I think Biden in many cases discussed getting rid of the 1031 as kind of call it caveat to kind of, battle Trump, given the real estate, what he's known for and stuff like that, and kind of use that as a talking point. But it would be really sad to see that go away. I think everyone needs to pay close attention as to what happens there from a legislation perspective, but I'd be surprised if that actually gets removed from the tax code. Yeah,
I would be. I mean, I know some people are concerned about that, and I hear a little bit about that. I think, if that were to happen, I can't see that ever getting passed. It's been in place too long, and and people lose their step up basis and stuff, you know, and they pass stuff on to their heirs would be a huge problem, I think.
Yeah, and again, I mean, to that point too, it's not even about real estate at that. A lot of people are using 1031 money to invest in opportunities that then bring jobs to a center or to any type of property. It's a huge trickle down effect, right? You take that away, and yes, there may be more taxes paid at that moment, but I think spurring away from investment, there's a huge downfall of job creation that comes with that.
Yeah, I agree with you completely. So we have another IU grad has joined us here, Bob. He's looking to get started. He said in commercial real estate ownership. Suggestions on, so this will go to you, Steve. Suggestions on where to get started, and what's the attractiveness of triple net versus multi-tenant retail. Maybe we can chat about that a little bit.
Yeah, I always tell people to start small, right? It's a lot easier to buy a single tenant property than it is to go and buy, unless it's a stabilized multi-tenant property. But I always say, it's twofold. You buy a multi-tenant property, you lose one tenant, you still have some other tenants to kind of back you up. If you lose on a single tenant property, you're back to, vacancy of 100%. I always find people who are starting off in, really anywhere in real estate tend to buy duplexes and fourplexes and stuff like that. But, buying, value add retail, whether it's on auction or traditional, small, I think to get your feet wet is kind of a way to do it. It's tough. It's a tough industry to break into. As I always say, it's very easy to buy a deal. It's a lot different to operate a deal.
Yeah. So I think, multi-tenant retail, for example, I mean, you got to have the stomach for it, right? Because you're going to get vacancies and you're going to have to do TIs and you're going to have to do work. I mean, versus owning a Walgreens triple net where you just get a check every month. But so it kind of depends on what your profile looks like and your risk profile, right?
Sure.
But yeah, I agree with that. Start small. Start small with something that's bite-sized and you can understand too, right? Same thing. If I tell people the stock market, I'm not a huge stock guy, but the only stocks I own are companies I understand. Apple, Starbucks, Coca-Cola. I try not to take too many flyers, although some people in my office here, try to get us to do that from time to time. And
for sure,
got to stay with what you know.
Absolutely.
Are you seeing auctions selling at better cap rates than regular purchases? I would say yes, probably, because one of the dynamics of the auction is you bring a market and the sellers have the ability to meet that market if they choose to. So if they want $5 million for this asset and you have a bunch of buyers at 4 or 4.2, they have the ability to engage those people, and drop the reserve pricing and lock those people in. So I would say, as a general statement, my opinion is you probably are seeing better cap rates. Steve?
I agree with that. I guess just to as a caveat to that, it's a lot of properties that we've traded this year tend to, for some reason, be properties that I would argue are not that well marketed traditionally. And say they were a 10 cap as an asking price in a traditional marketing. We're selling those deals at a 10 cap on auction. So I don't necessarily think you're getting less of value for selling on auction. To your point, Bob, right, you're meeting the market. If it's below where you wanted to be on an asking price, you have the ability to go down there. But there's many instances where even I'm surprised where we thought we'd have to give up some level of discount because it was going to auction, but push come to shove, it ended up trading for the same number or higher than it was marketed for traditionally. Really is a function of it not being marketed that well. And I don't think anyone really knew it existed out there. So it can go both ways.
Yeah. I think you're probably you're finding better value in the auction format. Not always, but because sometimes prices get a little crazy, right? If you have a really nice property that's well located and you have a lot of people at the party, it sometimes can get, it can go the other way.
100%.
Just industrial warehouse, small manufacturing. I think that market's staying pretty strong from what I call the Amazon effect, right?
Yep.
Distribution and it seems to be big as ever. And so the industrial market to me seems to be one of those segments that's going to stay strong during this whole thing. And I don't think you're going to see a bunch of that stuff coming to market. That's just my opinion.
I think it's a valid opinion. I don't see how it could, right? There's no default risk there right now. We're not seeing it. every single tenant deal that we see hitting the market that is, really priced accordingly. Even it could be a 5 or 6 cap type of deal. That stuff's trading. Everyone is chasing single tenant industrial, even multi-tenant industrial right now. And the stuff that's vacant tends to be selling to users right now because they can't find space to lease. So there's no one hurting in the industrial space right now.
Yeah, and particularly in like major markets, right? I mean, here in
There's a
California,
shortage. People would like to build more. It's so expensive to build, and the lease rates don't make sense for it. But yeah, there's a huge shortage of industrial.
Yeah, that's what I see too. What do you opportunity zones? What do you think about that? I mean, does that help you in your sale process?
I sold a few properties that were marketed really towards opportunity zones. I think a lot of people, like, it was a very exciting topic when it first rolled out, right? When we have a property in an opportunity zone, we're advertising it accordingly. But I don't know that we've really sold that many deals where an opportunity zone investor was seeking out that specific asset. There's a lot of complex, tax ramifications tied to opportunity zones. It's not that simple. And you have to be very long-term thinking with it. It's not a, buy and flip type of situation. And so, I haven't seen it really come to fruition. In urban markets, people have used it for development and stuff like that. I haven't really seen it, being a huge item for marketing purposes on auction.
Yeah, other than we flag it, we
Right.
always seem to flag it.
Yeah.
So this is a good question. Banks, right? Bank branches, Chase, Bank of America, Wells, they are essential businesses, but with more of the movement to online, I mean, are the banks really going to need that 5,000 square foot, 6,000 square foot freestanding building that, they're paying huge amounts of rent on the hard corner, other than that people see their sign and stuff? Because I actually went into the Chase Bank here in Orange County, and I haven't been to the bank in a long time. I can't remember why I had to go in there, but, and they had been closed. They had been closed since
Yep.
March. They just opened like 3 weeks ago. And they have this big, beautiful, brand new, giant building right by Fashion Island that I'm assuming they're paying $500,000 or so on rent on every
Yep.
year. And so, I think, and we've seen quite a bit of closed bank branches show up on the auction platforms, right?
Yep.
And some of the more regional banks, but yeah, I think we probably see more of that. I don't know what you think about that.
I think 100%. Everyone I talk to, not even necessarily in my age bracket, when I talk to my parents and people of their age, no one's going to the banks, right? It's mobile deposit and, sending money via Venmo and stuff like that. Whenever I get a check, I just snap a picture of it on the Chase app, and that's how I deposit. I would be surprised. The really not great for the seller. I mean, a lot of the bank branches happen to be owned by the banks. Some are single tenant and sold on sale leasebacks and stuff like that. Low cap rates traditionally is how they've been sold. When they're sold vacant, you're really, it's a price per pound or price per square foot type of sale, but they're very well located real estate. And so they're very easy
to have drive-throughs.
A lot of them drive-throughs, right? So you can backfill them for QSR and whatever other type of, convenience for consumers or retail that you're looking for. So I think it's going to be a hot sector for buying and kind of repurposing. I don't think that's somewhere I would buy for a long-term investment in a single tenant bank branch today. But to your point, I'm seeing them all over on all the auction platforms, vacant bank branches.
Well, I think we're seeing too, like people really, I mean, we've sold some closed, quick service restaurants, old KFCs and things like that have drive-throughs.
Yep.
That are typically pretty well located, right? And we've had a huge amount of activity on those just because everybody wants a drive-through now. I think it's funny, having been involved in a little bit of development along the way, you had to go and beg the city to get a patio, or you had to beg the city sometimes to get these drive-throughs. And now, every restaurant in town is out in the parking lot. And
yeah, no,
really
100% for sure. Right.
But well, another good question. This is, a lot of debate on this, the hotel sector for the next 12 months. I think early on, I said, I saw some data yesterday that 28% of the CMBS loans on primarily limited service hotels are in some form of special servicing or are in default.
Yeah.
And, the hotel space in that limited service space, Marriott Courtyards and Hampton Inns and things like that are, they're running 50% occupancy, maybe.
Yeah, on a good day.
um,
Right.
On a good day. And the high end stuff is, probably doing worse, particularly in, major metropolitan cities like New York and
Yep.
Chicago. And I was at the Phoenician Hotel in Phoenix, nice resort, but it was
Yep.
half full. But the data's kind of skewed because they had the back half of the property closed, right?
Got it.
Rooms weren't even, they weren't even like on the market. And then the rest of the hotel was only 50% occupied. So
Got it.
what do those numbers really look like, right?
Yeah.
And they still have to staff it, and they still have to keep, people working at the pool, and, their costs are staying
Sure.
pretty constant, right? And so, yeah, I think there's gonna be a lot of trouble in the hotel space. I really do.
Yeah, I echo that. I think that's one asset class that we've seen trouble already, right? It's not like we're kicking the can down the road. I mean, we're seeing a lot of that REO starting earlier than maybe the other asset classes are. But that narrative makes sense, right? Business travel is down substantially. I think holiday travel this year is going to be a killer to a lot of the hotels really all across the country as well. A lot are sitting in forbearance right now, so we're going to see a lot more hotel activity on the REO side next year. It's sad to see. I was talking to a few groups recently that are talking about, taking former hotels and converting them into multifamily. I think that's a cool idea. Relatively easy to do the way that they're set up. But yeah, there's going to be an influx of hotels that go up for auction next year. There's no denying that.
Yeah, and I think I'm not sure what sector, gets hit the hardest. Luxury. I think the limited service stuff in certain markets stays okay,
Yep.
but do you really want to own the Ritz-Carlton in New York right now?
Right. It's tough. Yeah. No, and you're already seeing there's articles out there all the time about, this hotel and that hotel, storied hotels, that are infamous hotels that have been there for 100 years that are already closing and announcing not reopening. And, it's terrible to see. It has such a large economic impact on a city, when it comes to travel not being there. And it's not just the hotel that's closing. You've got a whole ripple down effect in that local economy.
And again, I know we're not supposed to be traveling so much during this period, but I've actually have been on a few trips. I was in Las Vegas 2 weeks ago.
Yep.
For some meetings, and I was with one of my partners, and we had a lunch meeting, and we had like an hour or two to kill. So we walked into the Mandalay Bay Casino.
Sure.
And on a Wednesday afternoon at probably 2:00, and I mean there were 10 people in the entire place.
Really?
Maybe. Oh, yeah, it was like there was no one. I mean, it was kind of scary, right? It's
Yeah,
like, where
that's
is
scary.
it?
I would have thought, at least, because you think of Vegas, like, I know people aren't traveling there, but if you're a local, what else do you have to do, in the summer when it's hot outside? So I'm somewhat surprised, but, I pay attention to the gaming stocks and stuff like that, surprisingly surviving and, doing
They
relatively
seem
well.
to.
Yeah, I think a lot of young investors are pouring money in there, hoping for, sports gambling and stuff like that, kind of taking over long term. But yeah, Vegas, I've heard of some people going there, but the travel scene in Vegas is down substantially. And there's always been, extra hotel rooms in Vegas, right? You've never heard of Vegas being sold out.
Right.
So yeah, it'll be interesting to see what happens there.
Well, that was another interesting thing too. The room was like $120, right?
Sure.
And so yeah, it's kind of crazy. They say the weekends are fairly busy, but during the week it's pretty much dead.
Yeah.
This is a good question. Comes back from our friend there in Bloomington, I think. She's interested in kind of getting into the bank and lender space in the auction format as a broker. And that's a great question. It's a difficult place to penetrate, right? And Steve's been really successful doing that, but I know it took a long time, and you had to do thousands of BOVs, and it's really all about finding that one or two relationships and kind of building on those. Because I know that, historically the big servicers, they do exercise the brokerage community a lot on doing BOVs, and then sometimes it never turns into anything.
Most of the time. Not sometimes.
Most of the time. Yeah. Well, I was trying to be politically correct there a little bit, but yeah. And so it's It's a persistence process. It's more
Yeah.
about, can you stay in the hunt long enough to get through all the mess that you have to go through in order to start getting some activity there.
Yep.
So any thoughts on that, Steve?
Yeah, I mean, I guess it's to your point. I mean, it's a relationship business. It's not like you pick up the phone and call on a private seller and pitch, your services and why you may be, better than another broker. A lot of it is, we offer management services in-house, and we've got in-house legal. So we help working through REO and stuff like that, is free of service and stuff like that. We have a leasing arm. So there's a lot that comes to it. There's many instances where we're valuing a property 8 or 9 times for a servicer, and then we hope to get that deal. Servicers change pretty often from one to another on a property, so you may think you're working with the right one and then it changes. But I always say, like, if you can add value to a servicer and you're local to that market, it doesn't hurt to call. But it's a tough space to break into. It takes, and it wasn't necessarily me. It wasn't me who did this. The firm, we've been around for 30 years. It's been a long-term relationship with all the servicers here. It's something we specialize in. And so it's a tough space to play in. That's for sure.
Yeah, no, I've seen it firsthand all across the board. And plus, when the servicer gets or the asset manager gets comfortable with somebody they know can perform,
Right.
It's kind of tough to break that out because, they have to answer to somebody too, right? Everybody's got to answer to somebody.
100%.
So they need to be confident that you're going to perform because, they're getting evaluated on that performance too. So
No question.
they're a little risk averse sometimes, right? So,
And
which is
rightfully so. I understand that. I mean, I when I put my servicer or seller hat on, I would tend to use someone who I know, from a repeat customer perspective that can deliver, regardless where the asset is. And that's kind of what we kind of pride ourselves on. It's that we're very location agnostic. It's really about who the tenants are and what you're looking to get in terms of pricing, and then we go and do it.
Okay, that's good answer. Another question too, there's a lot of, I don't know it's almost like gamesmanship to a certain degree, getting your buyers ready for auction day and getting your sellers ready for auction day, right? Because, a big part of your job is to reach out to all those buyers that are potentially buyers and get them comfortable with the process and the real estate. Our job is to get them comfortable with the auction process, get them registered and that sort of thing. But, you're still selling the real estate and part of both of our jobs is, to move the needle a little bit, get the seller to take a little bit less, get the buyers to pay a little bit more potentially, and hopefully meet in the middle and make a deal in real time, right? Doesn't happen over a week. It happens in 30 seconds. And so, do you have any thoughts on, how you prepare your buyers and how you prepare your sellers?
Yeah, I mean, I think it's active communication, right? I think it's being fully transparent. Sometimes you have tough conversations. As properties listed or set a reserve price, you call it $2 million, and the market's telling you that you're really at $1.5 million. I think a lot of first-time auction brokers kind of wait until the day of auction to have those tough conversations. I always tell the first call I have with a seller that we're talking about going to auction, you may want $1 million for the property. I don't care if you want to set a reserve for $10 million. The market is going to dictate what the property is worth, right? We're going to do our job as brokers to bring as many people to the table. They're going to underwrite the deal and tell you what they think it's worth. And that's really what you're paying us for, is our expertise to bring people to the table and really get them comfortable to trade on, to buy an auction property. But and it goes both ways, right? Like a lot of times we'll give guidance to buyers and it's significantly higher than they wanted to buy a deal for. And so we're always telling buyers to put their best foot forward. You never know. I mean, it's such an emotional day, auction day, that a seller, who says they need $1.5 million, you don't know that they really would take $1 million, and that buyer may come up another $200,000. It's all about the storytelling and getting people comfortable and really understanding what you're selling and understanding how auction works. It's not just signing up a deal and having it on autopilot. You got to work the deal. And then when you got a winning bidder, you got to work it to closing. It's not, they didn't just buy the property that day. There's a lot that goes into it.
Yeah, no, I think it's a little more complicated. And I think you had a great point. A lot of it too is about the setup in the beginning. It's like, hi, Mr. Seller, right? You want $10 million for this, but the market may be 8, right? And the data maybe looks like it might be 8. But so if we get 10 buyers and we have an active market, I mean, are you a seller kind of thing in the beginning, very early on? You can't wait. And then every week when we talk, we do have calls with the sellers every week and the brokers. And that's one of the reasons why the brokers are so critical to this process too. The broker partners really drive a lot of those conversations, right? And then we can help a little bit with delivering just market data, right? We're just delivering the facts, right? We're just telling you, this is what we're hearing. We may be right, maybe wrong, but auction day is going to decide. So if you're a seller, great. If you're not, then you may be holding on to this for another year or two. So It's really up to you. Another question's come up too is just if you're a broker and you represent a buyer in the auction format. We always suggest that there's a broker co-op fee offered. Really, the seller's agents do a majority of the work because, as Steve was saying, once you get everybody to auction day, which is a lot of work, you still got to get contracts signed and you still got to get money deposited, and we do a lot of that behind the scenes. And then you still got to close the deal, but we don't want to discourage anybody from coming to the party, and so usually we suggest you offer a buyer or a broker co-op. Doesn't
100%.
always happen, but and even if the broker or the seller's not in a position to do that, we will do that lots of times out of our share of our platform fee that we charge. So we want everybody to be encouraged to participate. So we'll see. We're getting good questions. How often do people buy auction properties sight unseen? You'd be surprised. I mean,
yes. I don't have a great stat on it, but I'd say more than not.
Yeah,
it happens a lot.
So I've been doing this 10 years and I've done thousands of these things, and I'm shocked at what some people do that have never seen the property or even sometimes had a conversation with the broker, which is, crazy to me. But, part of that is, they can review all the due diligence online. They can, and depending on the product type, like retail, you can go sit in the parking lot. You don't necessarily have to have a tour or whatever. You can go, to the Subway and get a sandwich and talk to them about how the center does and stuff. But yeah, you'd be surprised. And again, I don't have any hard data on that either, but it's always fascinating to me.
I echo that.
Yeah, but that's part of the fun of it, right? I mean, some of that is fun, right? I mean, when stuff goes well in the auction, it's a fun deal. It's a fun day. It's exciting.
It's a rush. That's what I think all of us come back for more every single time. Even when there's heartbreak involved in it, we still come back.
Oh yeah, because when it doesn't go well, it sucks. But when it goes well, it's great. Buyers are happy, sellers are happy. The brokers are happy. The transaction only takes 75 days or so. It's it's a win for everybody.
Absolutely.
Who do you recommend for legal review of a triple net lease purchase? I would have to. I would have to defer. You have to pick your own counsel there. I can't really make any recommendations there.
And use someone local. I always say too, that I mean, someone local to that market or that state for sure.
Particularly the state, whatever state it's in.
Yeah.
Okay. Well, I think we're about running up against our our hour here. I've appreciated all this. We've had good, participation from everybody. We appreciate all the questions, and hopefully, you guys have found some value on that. Any sort of closing remarks, Steve, you want to make?
No, I think, as I always say, if anyone has any questions after the fact, buyers, sellers, happy to reach out to me, reach out to Bob, happy to have those conversations offline afterwards. But, for buyers, keep looking for deals, and, sellers, if you want valuations on assets, we're happy to do so. So be in touch with us.